Volume profile is one of the most powerful tools out there, but it's also one of the most misunderstood. So in this video I will break it down in the simplest way possible. So watch this all the way through, because in the last part I'm showing you where the real edge is. So welcome in on part 3 of how to becoming a prop trader in 2026. So first things first, let's go here on the blank sheet and I'm showing you first the shapes of volume profile. I did this several times on my channel, but let's break it down in the most simplest way possible. So I have drawn here some shapes, so let's start here with the first one. So the first one is a trending shape, right? It's this shape you will see when the market is heavily trending either to the upward side or to the downward side. You will see big nodes, you will see low volume nodes, you will see big nodes and low volume nodes. When you actually see such a shape right here, you can play support and resistance on high volume nodes. High volume nodes are always made when big players are stepping in or most of the majority are searching for their trades, right? That's why you're seeing on the high volume node is that the market is ranging around and the big players looking out for their positions either to the upward side or to the downward side. Every time you see a low volume node, that means there is no business made in this low volume nodes. And it tend to be right here like this. When we draw here a volume profile out with a high volume node, a low volume node and a high volume node, right? So what we have said before is on high volume nodes, the market tends to range. Now, what is the market trying to do now is either break to the upward side or break to the downward side. So let's say we are breaking to the downward side, and often than not, the market tries to fill this low volume node explosively to the downward side, right? So when the market comes down, breaks out of this range, the market tends to one time framing to the downward side and then creates another node. So now that's not always the case, because the low volume nodes can actually act as resistance or support as well. But most of the time, big players searching for their trades on ranging markets and then go to another high volume node, right? That's why I'm always saying the market either looks for higher value or lower value. And you really need to learn this, that you don't see the market anymore in higher highs, higher lows, higher highs, higher lows, higher highs, right? You really need to learn that the market, sure, the market does higher highs and higher lows, but you need to learn that the market moves in certain phase, right? Push up, range, push down, range, push up, range, push down, range, push up, range, right? These ranges right here is where big players looking for their trades, right? Here is high volume, right? Here is low volume. So keep this in mind when you are looking out for your trades. Now, as we said, the first profile is a flat profile and you can clean trade support and resistance. I always mark out high volume nodes and then look for my pullback into support or resistance, either side. If we're trending to the upward side or to the downward side, then I'm looking for my trades to continue this trend. So what we have right here is a D-shaped formation. So let's actually delete this right here because we don't need this for now. Now, on a D-shaped formation, the market tends to range, right? So every time you see such a D-shaped formation where is low volume above, big spike volume in the middle and low volume below, that's a D-shaped formation, and it's very clean to spot on volume profiling, either on TradingView or on ATAS. It's really clean to spot these shapes. Now what the market does now right here is the push up, the push down, the push up. So we are ranging. We have no acceptance above, we have no acceptance below. So every time you see such a shape, you can play the extremes. So you really stop guessing. You find high probability trade setups in the extremes of a D-shaped formation, and you know you just trading the rotations back to point of control. So let's say you have a D-shaped formation, the market is ranging around, right? And we go up, we find no acceptance above, we're trying to break back in. So what's your target? It's the POC or the other side of value. You don't need to make this all complicated. Order flow or volume profile analysis is not complicated. If you do this every day and repeat this every day, you find yourself to catch massive trades with volume profiling. So let's go over here on the next shape, and this is a B shape formation, right? So right here you have value area high, value area low, and the point of control is there. So that is when the market is deciding to create here low volume, and then spikes all the way down here. Now what does this look like when we draw out a chart? So we have a fast move down, right? And then we are ranging. That is why this is then a B-shaped formation. Value area high, value area low. On a B-shaped formation, you can look out for trades when the market, right, decides to break to the upward side, finds no acceptance, breaks back, and then you look for POC or value area low, and then you look out right here for a breakout and drive this market lower. You can also wait for a breakdown, retest, and then looking for lower value. So you often see when the market is trending down fast enough and creating a range. So that's a B-shaped formation, right? So when the market then decides to break above value area high and comes back in, that's a trigger to sell short and either look for lower value or take profit on value area low. You can also wait for a breakdown, retest, and then we are looking for lower value. If we actually decide to push up and stay above value area high and we are clearly holding above, right, then you can definitely look out for reversal trades and drive this market to the upward side. So the next one, you probably guessed it, it's a P-shaped formation, right? Value area low, value area high, point of control is when the market decides to push fast to the upward side and then makes a range. Now, again, guys, let's just draw here this chart. The market decides to push straight up, creates a range, that's your P-shaped formation. When the market decides to push down, breaks back in, trigger long, right? If the market decides to push outside, holds or retests, you go with the trend. So that's all about volume profile shapes. That's why I'm saying you don't need to complicate everything, right? When you use these B shapes or P shapes or D shapes, you can see now that the market moves in these phases right here, right? So P-shape formation, P-shape formation, P-shape formation, and let's say the market pushes here aggressively down, creates a range. What we have, B-shape formation, right? You can look here for cells, you can look out for here for your cells. So these three shapes, study it and you will get such an amazing edge in futures trading. I will promise you this. So I hope that's really all clear for you right here with the P, D and B shape formations on volume profile. Now when we are looking here now on the real volume profiles, in the last couple of days the market is in such a great upwards trend, right? And you can clearly see this right here now, that we are getting right here P-shaped formations, we are getting here trending profiles, right? And we are getting as well D-shaped formations, and we have as well right here on Friday this P-shaped formation. So let's jump here a little bit back. So I'm now on the bar replay because I want to show you how you can use the day before volume profile to get a bias what could be happening today. Now, as we know, yesterday was P-shaped formation. You can clearly see this, that this is a P-shaped formation that we learned before. What we have learned as well is if we mark this here out, so that's the P-shaped formation high, that's the P-shaped formation value area low. What we have learned is if we break outside value area high and holding above, we are looking for a higher value. we also can look out for this value area low to push to the upward side, right? Now what we are seeing here on pre-market, what we have right here, it's a D-shaped formation. So the big players looking out for their entries. I have said always when the market is ranging, big players trying to get their positions in, right? And look either for a break to the upward side or break to the downward side. Now in this case that we have now our buyers is that we are looking for longs anyways, right? So we are just waiting that this D-shaped formation gets broken. We are looking for a higher value. So on this day right here, I'm bullish, right? So let's just actually play this a little bit further out and we can see the market. So right here on New York session, we can see New York opens actually right in here. So New York opens right here and we are extremely pushing to the upward side as soon as the market opens. So knowing we're looking for long, so we can actually look here now for our long positions. I will get to this, how you can find here good opportunities to buy the market or to catch some pullbacks, right? But I'm only wanting to show you here right here how you can find good buyers. So let's go here actually a little bit back right here and let's just watch this P-shaped formation right in here. You can clearly see that this is a P-shaped formation right in here. The market on the next day stays in this value area on pre-market, and then what we are doing, re-breaking to the upward side, breaking value area high from the past day. Again, you can do this all over again right here. What we have right here is a P-shaped formation. Now, this is a P-shaped formation, guys. As well that we are making down here another node. The most of majority traded is all the way up here, so I consider this a P-shaped formation. What we have right here is this value area low, value area high. In this case, what we have that we have not accepted above value area high, right? So in this case, when we are not accepting above value area high right here, what I have said is that we can look out then for our short positions. And you can see this right here with all these wicks, the market rejected, comes down, testing VWAP down here. Again, what we have right here is a trending profile, right? So we have here a lot of volume areas. On the next day, we can see the market is ranging above value area high. So we are definitely looking out for long positions. The market opens right here and we are shooting straight to the upward side. Let's go a little bit back right here. Let's just searching here for a B-shaped formation that you can visually understand how a B-shaped formation looks on volume profiling. Now right here we have a B-shaped formation. You can clearly see this right here. That's a B-shaped formation right here. We have here value area high, value area low. And as soon as the market holds underneath value, we are looking for lower value. And you can clearly see this right in here. Now last but not least, right here, that's a D-shaped formation, right? We are looking for the extremes above and the extremes below. Now, of course, guys, I know the volume profile is developing throughout the day, right? So let's go here back and you can see that the market, when you use daily profiles, you can literally see right here is that the market wants to build a D-shaped formation. We have not accepted above. So now we're just waiting that the market reaches value area low. If we find no acceptance below, the trigger back in, the target point of control, the target value area high, right? So let's just play this a little bit further out. Right here you can see the market just rejecting value area low, pushes back up, right? So I'm here now on a 30-minute time frame. You definitely look then for 1-minute entries on this specific day to catch the extremes on the high or on the low right here. So now you can see how you can use the day before as your bias. You can also wait that the market accepts underneath a value area and then looking for a lower value. But always keep this in mind that you have a bigger picture, that you have here, for example, a 30-minute time frame that you can now use the day before or the day before value areas, then to look out for your trade decisions on that specific day. Now let's just go here on this comparison mode right here. So I have on the right hand side the 5-minute time frame, on the left hand side the 30-minute, as I said. Now, as I said as well, you always need a bigger picture. So that's why it's definitely helpful to get your eye first right here and then on the lower time frames, right? That's right here is literally one of the biggest questions that you should tell yourself, is if you are a high frequency scalper, if you want to be quick in the market and quick out of the market, then this approach right here that I'm showing you right now is definitely better for you. If you want to buy the market and let's say be in a trade 30 minutes, then this approach right here that I'm showing you is more for you. My trades on average go about half an hour or an hour, right? So that's my style, and this is why I'm showing you then on the last part exactly how I'm doing this. I'm showing you right here how you can quickly scalp markets, and that's why we have here, when I open the right hand side, we have here two splitted volume profiles. I've already as well made a video about volume profile splitted, so you can all find the settings on my other videos. But right here what we have is a pre-market volume profile and we have a regular trading hours profile. Now, as I said, it's the same principles. We are looking for shapes on pre-market hours that decides either we are looking for sells or we are looking for longs. So what we have here on pre-market is a very trending profile, right? And we can clearly see this on the chart that we are trending to the upward side. So when the market opens, what I'm doing, I'm looking for my buy trades. Now, how you can find now good buy trades is, first of all, is to mark out value area high and value area low from pre-market, right? As well, what you can do is mark out high volume nodes on pre-market. So right here we have a high volume, right here we have a high volume, right? Okay, so that's the nearest two zones, and as soon as the market opens right here, so let's put the regular trading hours away. What you can see is that we're breaking out, we're retesting, we're pushing back to the upward side, and that's where you can now jump to the 1 minute and look out for your trades, right? So why I'm saying that you should be looking for pretty quick scalps is because these zones are not as strong as on the 30-minute and on the daily volume profiles or the weekly volume profiles or the monthly volume profiles, right? So you need to keep this in mind that you are looking here for quick scalps. What you also can do is to play the volume nodes on the regular trading hours profiles, right? So when the market opens, you need to wait 1.5 hours. So let's go here 2 hours into the market, right in here. And then you can play right here these strong volume nodes as well, right? So what we have again right here, it's a trending market. And as I said, you can look then to mark out high volume nodes and then look for your trades. So let's just play this a little bit further out. You can see that we are rejecting here on this volume node and we are just trending a little bit to the downward side. So let's play this further out. So we can see now that we are breaking here strong through, gets a retest, and then you can look as well for long trades. So let's just see how this will play out. So this right here is just ranging around. So you can see now that we are building here a massive node. So let's just extend this right here and right here. And as I said, guys, the market moves in these phases right here. So balanced, imbalanced, balanced, imbalance, right? What we have right here is push up, balance. So what we are doing now, is just wait, where could the market break out. So let's just play this now out and see if the market breaks to the upward side or breaks to the downward side. That's not a significant candle, right? And you definitely should be using order flow. You could then see if you get absorption for the buyers and all that good stuff, right? But that comes on my last part, so let's just play this now out. So you can see now that we are holding above what? Above balance. So you can trigger here along, right? So let's just play this out. And you can see the market searching for higher value. And that's why I'm meaning you should be looking for pretty quick scalps, right? So you jump here in, your stop loss goes underneath right here, and you are just targeting a 1-to-1 or something like this. You would be in on this trade for 5 or 10 minutes and then you are out, right? So that's so key that you need to understand what trader you are. Are you really happy if you're trading quick scalps, or are you more calm with your trading if you mark out key areas, wait that the market comes here and then jump on the trade and let this trade run, right? So this approach right here is really for high frequency scalpers. You really need to be fast when you're doing this exact approach right here. So your eyes need to be glued on the screen every second, because the market can quickly decide to push through a zone, retests, push up or push down, retests, right? So when you are a scalper, I hope you found this approach right here helpful. And as I said, really focus on the ranges. If you have more focus on the ranges, most of the time traders look away when there is a range. I'm definitely not looking away. I'm paying high attention if the market creates a range, because there is where the most of the traders or the big players making their business. So I won't be in this phase as well. You can see if you get more and more confident, you can take this break down and this break back in for your long position. Why? It's because the market created here a range. The market makes a P-shaped formation. We break down, we find no value below, right? So we find here no acceptance. The market breaks back into this range. That's your trigger to look for higher value. Why? The bigger picture is to the upward side. We created here a massive pump. We created a P-shape, right? So you can now see how you can build this whole trading or this whole game plan for your entries, and then you position your way with the big money and the market shoots here to the upward side. I know that's all hindsight, but if you're doing this often than not, you will find yourself to catch massive trades. So that's to this approach right here. So I hope that's all good enough to understand what I'm doing right here with volume profile. I'm showing here right now the exact way that I am doing it, right? So let's just go again on the 30-minute time frame. And what I'm doing now is to put on my order volume profiles. Let's zoom here a little bit out. And this is the exact way that I'm doing it, guys. This is a weekly profile, that's a monthly profile. And right here, the gray ones are daily profiles. So what you're seeing right away is massive spikes of volume. And these exact massive spikes right here are my key areas for your support and resistance areas. So you can now see as well that you don't need to zoom in on the market and mark out your support and resistance right here, right? Your support and resistance right here, right? So you don't need to do this. You just zoom here out. You can see the market is in a clearly upwards trend. So I'm definitely looking for buying opportunities only. And then I'm having here big spikes of volume that I can watch out. As well, I have the daily profiles to see what did the market the day before. Do we create a D shape, a P shape, or a B shape, right? So what I'm exactly doing right here is that I'm not looking for shapes on monthly and weekly profiles. I'm only looking for shapes on daily profiles. So what I'm doing then is to mark out my key volume spikes. So we have here a massive volume spike right here. Okay, then we have here a volume spike, then we have here as well volume spike, right? So you can do this all over right here, and you can see that the market have here pretty high spikes. So I want this on my chart. So then when I have here my zones, I have a strict rule then that I'm only trading when the market comes to a zone. So you get what I'm doing right here. I'm not even need to guess when the New York opens. I already have my zones, and when the market comes here, I want to be prepared, right? So let's zoom right here now in. What I am doing then is to watch out on my day before profile. On the day before we had a D-shaped formation. So I have said if the market don't hold above value or don't hold below value, I'm just playing the extremes. So as the next day started, we can see on pre-market the market rallies to the upward side. So as this happens, that the pre-market pushes to the upward side, I have said I'm only looking for longs because the market breaks out on the balanced phase and pushes straight to the upward side. Then what I'm doing is to go on my 5-minute or 1-minute time frame, and then to look out for these trade setups on these specific levels. So let's just open this right here. So as you can see, the market opens right in this candle. The market pushes to the upward side, breaks out, and this is the exact point that I'm looking here for long trades. On my order flow, I'm seeing here strong bias of this level right here, really strong bias. So that's my trigger to take here a long position. And what I'm doing then is take profit on my next zone, right? So that's not really hard. You're just playing the zone to the zone, right? To the zone, breakout, retest, to the next zone. That is all I am doing. Now as well, I'm looking here on the regular trading hour profile, right? How it's developing. Do we get P shapes or B shapes or D shapes or whatever, right? So you need to take your current profile as well into the context of your whole volume profile analysis. So what then happened right here, I have explained this before, we push outside this zone. We're coming here back to retest this zone, and I have seen this, that the market creates here a range. So what we have is a P-shaped formation on this exact zone. So that's double confirmation right here. We're breaking down, find no value. We are looking for long positions right here and ride it to the upward side. Now, of course, you don't have here targets on the left-hand side because we are on all-time highs. So what you can do then, stop loss right here, 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 right? So as the market goes up, you drag your stop loss with it. Now let's go here to the left hand side again, and let's just go on a random day. So let's say we're going right in here, and let's delete all the drawings, and let's just seeing what the market gives us right here. So again, what we are doing is mark out spikes of volume. We have here a spike, we have as well here a spike, and we have here a spike right in here. So, and when I'm here on the left hand side, you can actually see that the market rejecting here these zones perfectly, right? So these are zones that you want to watch. Now as the market opens the next day, what we have the day before is a P-shaped formation. So I'm definitely looking for longs. So as the next day created right here this D-shaped formation, so that's pre-market. So we can see that the market comes here down, testing this volume spike, pushing back to the upward side. So if you are a pre-market trader, this right here would be such a great setup down here to push the market back to the upward side. Let's just play this now a little bit further out to see how right here the market opens. So let's just go here back, and let's actually jump here to my 5-minute time frame right here. So that would be down here, right in here. So let's go here to my market open right in here. So I'm giving you here such an great approach, and I hope you will enjoy trading like this. So this whole approach right here gives me so much more confidence in my trading, because I know where I should be trading and where should I be not be trading, right? So this is the exact approach that I'm doing it every day, and I hope I get a little bit of reward from you to smash the like button and hit the subscribe button, because that's really secret sauce right here that I'm giving you this right here, because that's the exact way how I'm getting funded and how I am getting payouts on prop firms. So let's just play this now. The market opens right here. So, and we're coming straight down. We're rejecting this zone right here. We are looking here for longs. We are looking here for longs, right? The market rejected and pushes to the upward side, straight on the open, right? And that's why I am then taking my stop loss here, taking my stop loss here, stop loss here, my stop loss here. Now it's key to look on order flow. What's happening when the market comes to a zone? You cannot jump here blindly in. That's ridiculous. You don't do this on any zone. If you're trading ICT or whatever, you don't jump in on a zone when the market hits a specific zone. You need confirmation. You always need confirmation. So let's just actually go to the 1 minute if it lets me right here. Okay. And let's go here back as soon as the market comes here into this zone. So when here are lots of selling, I want that the market comes above these selling bubbles, then I'm looking for my longs, right? Because then it confirms that these sellers getting no follow through, and we have room to climb as soon as the market prints above these sellers a candle. But that is in another video. So right here you can see the market comes up. We actually getting here a retest as well. If you're seeing here selling absorption, this is such an A+ setup on a zone to look for sellers absorption and then drive the market back to the upward side. So let's just play this out, and you can see how the market is pumping and pumping and pumping right here. So right here is the exact approach that I'm doing volume profiling, and to look out for my zones or get my blueprint on the New York Open, how I'm looking out for my buyers. Should I be trading long? Should I be trading short? I hope you found it helpful for you. If you do so, you know where the like button is, you know where the subscribe button is. Stay safe. Peace.